I've been around the block a few years, just about almost 4 decades now in this business, and I'm primarily, just to set the stage, I'm a trader. I make a lot of trades a year, maybe 10, 15,000 trades a year, so I use all the products. I use digital currencies in combination with stocks, options, and futures, obviously. I'm here today to talk about digital currencies, trading, the adoption of almost anything digital, and how it's going to relate back to individuals. I'm not an institutional person, so I'm really representing kind of a conduit for individual self-directed investors and their representation into new products. So maybe a little bit different conversation. Everybody here's got different expertise as well. So I wrote a ton of questions, about like 15 or 16 different questions for these guys who, honestly, I've met a few, but I don't know any of them well, so this is going to be an experience for both of us, for all of us, I should say. But I'm sure they're all experts. What I want to start off by doing is just letting them just introduce themselves, quickly tell you who you are. And I'm going to keep everything moving, so we should get a lot of questions in, and hopefully we cover a lot of topics that that everybody can relate to and take something away. The most important thing for me whenever we're speaking is that every couple of minutes there's a takeaway. So that's what we'll try to do today. All right, guys, we'll start off. So I've got my list here. We can start with Steve.
Hello, everybody. Thanks, Tom. My name is Steve Watkins. I'm CEO of the Entrex Capital Market. We created a capital market system, a regulated market in Wall Street that trades entrepreneurial securities. We did the first blockchain trade in 2015 back then. So 3 years ago, we did Overstock.com's Tiger Cup security. It was the first security to ever trade on the blockchain, both on a primary basis to accredited investors and institutional investors, and then a secondary trade back. Since then, last year we did about 200 issuers trades on the blockchain as well. We just were nominated by IBM for a Global Blockchain Award, which is kind of exciting for us today. And our focus is to create a capital market system for entrepreneurs that uses the blockchain.
My name is Scott Diamond. I work with the Chicago Digital Asset Network. I probably have one of the more unique experiences up here just because I'm not a person of finance. I backed into cryptocurrency in a serendipitous way, trying to find new business models for a legacy employer that I no longer work for. And it kind of took on a life of its own. And yeah.
My name is Zhang. I'm the CEO of Canada. So for years, what's the largest exchange?
We gotta turn his mic up.
If you want to do crypto trading or OTC, you should come to us.
Hi everybody, Yuri, Zamostin, CEO and founder of CoinFide and Get Crypto Smart Academy. We've launched an educational platform that's dynamic and non-linear, in addition to a peer-to-peer decentralized exchange. Some of you may have actually seen our presentation at the bar chart event, where we took second place for technology and innovation.
Hi everyone, I'm Clifford, one of the partners at OneChain Capital. We provide institutional size liquidity, essentially block trades between crypto assets and US dollars. I'm right here in Chicago. We trade with just over 300 counterparties globally. So that can range from blockchain projects to hedge funds to high net worth individuals.
All right, so we'll start this off, and I'm going to start this off with kind of a personal question because I am an investor and I'm a trader, and when I look at the amount of currencies, I'm one of these fans of more large numbers than the whole deal. But look at the amount of currencies, that means the number of trades I make and the different things I participate in, whether it's alternative to a listed marketplace. My smallest number of trades are in digital currencies. And I can't figure out why I'm less attracted to that space as a trader than other spaces. I mean, I don't know. I don't think it's caught on. So we have 100,000 active retail customers, and we barely scratch the surface in listed, let's call it listed Bitcoin at this point, but many other listed products. what's going to change, and why should I be more involved? And that's just my only general question. I just want to know why I should be more involved as an individual investor. And that's just I'll start with you, Alex, and we'll go back.
Yeah, sure. So I think a lot of the initial interest in cryptocurrencies is generated by sort of a more philosophical, world transformative, fascination, right? You see, obviously, this is in many ways a millennial driven movement, and I actually first got interested in cryptocurrency because my little brother, who's 22 years old, was pulling on my sleeve, and you have to buy some Bitcoin, like it's going to change everything, right? It's decentralizing custody, it's decentralizing this and that and the other thing. So I think a lot of retail investors, look at the volatility, they look at the fact that the base currency in a lot of these trading periods is also a volatile asset, right? It's just a totally foreign sort of trading landscape where a lot of the assets like Decred or like Monero or Zcash don't have USD pairs to trade back into something stable, and there's also still a lot of friction just to get US dollar to get skin in the game, right? It's not buying Bitcoin on Coinbase isn't that easy yet. They mark it up 2 to 3%. People don't really know where the large access points are to getting skin in the game. So between just a lack of awareness of how to get money in the game and a lack of understanding about the usefulness and utility that stems from the technology and the future promise, I think people just sort of write it off as something that, especially the retail investors, write it off as something that they're not going to touch for them.
Ross, what regulatory changes need to happen to get more people
So, certainly from a global perspective, we can see, the long story short is basically, the strong economy like China, US, and South Korea, they're the core markets, and they have a strong regulations, on the cryptos. And but for the economies that are not so strong as those countries, they need to offer that they're more crypto friendly, or they overall, the industry should work with the regulators to advocate like industry so in order to really
So, Steve, I'll switch over to you. What is the one industry that's ripe for disruption because of cryptocurrency?
Well, I guess when I look at that, there's 26 million companies in the United States that don't really have a capital market. So I think the crypto, not currency, but crypto security world could be an opportunity that allows them access to capital and with blockchain allowing proof of ownership and mutable records along the way, with interest and dividend payments along the path, which allow traders access to a significantly greater volume of corporate trade.
So, do you think that, so just a quick follow-up to that, do you think the listed marketplace and traditional, the way we raise capital right now to finance innovation, is that going to change? Is that a risk?
Well, I think it's a significant risk. If you look at the venture capitalists and the PE model, they live on friction. They live on finding the one deal that nobody else knows about. Our job is to provide and neutralize that marketplace so that all of those 26 million have a forum that they can work in. One thing we should all be watching and cognizant of is the new tax bill opportunity tax. That's going to create a 10-year tax moratorium for income tax and capital gains tax for any investment in opportunity tax. So it's going to create a whole new world of tax advantage investment.
I'll throw this one over to Yuri. Yuri, as Bitcoin has finally been brought to the listed markets, its popularity seems to wane once the product. Now, it could all just be timing and cyclicality, I understand all that. But when it came to listed marketplace, it listed on the CME and the CBOT listed that it was 18,000 live and now it's 30. Do you think merging Bitcoin's dark web past with today's business news has hurt its popularity?
I think so, and I think the other challenge is that, unlike some of the other traditional investment stocks, ETFs, commodities, what have you, you don't really have a 20-year history behind it, and so it's challenging for new entrants into whether it's from a retail perspective or a trading firm perspective, for people to get in and really understand, the novelty effect that cash ape has wore off a little bit now that you have greater adoption. So people are trying to figure out what's going to happen. But most importantly, you kind of think about it, there's 1,600 plus currencies out there. And so in any traditional market, for something like that to maintain and survive long term is not really feasible. So people are starting to look at other things, whether it's Zcash, Monero, whatever it is, whatever the options are, or from whatever perspective they're interested in. You're seeing a lot of different things happen, and everybody started out with Bitcoin, but Bitcoin's not the only player in the space, and there's other, big two or big solutions out there that are potentially better, more scalable, and what have you.
That's good. Hey, Scott, I'll kind of ask you the same question because this is one of my favorite topics. I'm not sure if there's a transition going on between, I'll get to this question actually in a few seconds, but from innovation to actual functionality. And so I'll ask you kind of just the exact same question. Do you think merging Bitcoin kind of history into what it's become today with respect to business units has hurt its popularity?
Well, I'm going to real quick just go back to your very first question. Sure. You described yourself as not being much of a crypto trader. I'm completely the opposite. And, there's a group outside ATN trading and just using their engine as a non-professional trader. Probably about 90,000 trades this year. Because the market is 24/7. The volatility is there, and that's where the opportunity is, I think, for someone who's maybe not so sophisticated. But to get to your question, I think a lot of people, when they come to Bitcoin, it was actually very cringe-inducing last year when I would turn on CNBC and I was literally watching my watch and be like, they can't go 20 minutes without talking about Bitcoin. And everybody just talked about the price. And to me, that's like number 9 on the list of sexy when it comes to Bitcoin. I take a look at these platform asset classes as being, truly, I take a look at what I'm calling the future value utility. And so the utility of these baseline protocols are actually increasing. The fact that it was a bit of an anomaly that business press started jumping on the bandwagon and brought a bunch of people in who were only interested in price, speculation, and now a lot of those people have lost interest because they said, well, Bitcoin's down 65%. It's like, well, not compared to 24 months ago. So that's the other thing too. I think that the professional investor looks at things in very small snippets. What were my profits this quarter? What were they this year? Whereas I take a look at it as this is like a multi-generational experiment that's out there, and we just have to be fortunate enough to be alive and participate at the very beginning.
So just for a little bit of background, when we talk about volatility, the Bitcoin volatility fluctuates. Let's say, I'm not sure what it is today, but somewhere between 80 and 100 tomorrow. Let's use that as kind of a round number. Volatility, by definition, is expected move, and the reason that digital currencies, specifically Bitcoin and others that are more actively traded, are so interesting for traders/investors is because they are a speculative asset that actually moves. So there's the S&P's move, just to give you an example, average volatility, let's say 12 to 14%, and Bitcoin at 10x of that makes the expected move, 100% versus 14%, which is interesting to traders and /investors. And that's the story. The negative side to this, which I'll throw back at, let me throw this one over to, I'll throw this one, it goes over to Ross, just for a quick second. The negative side to it as an investor/trader is that there is a very limited derivatives market of the underlying. When there's a limited derivatives market, meaning there's limited derivatives that you can actually participate in, which I don't understand why there is such a limited derivatives market. The reason I say that is because that's where the strategy comes into play. It's one thing to be directional, it's another thing to be strategic. So why is there, I'll not ask somebody else the same question, but why, where's this market going to come from when it comes to, all of these products? The marketplace is big. The marketplace, I don't know what it is right now, 600-700 billion, plenty big enough for a underlying derivatives market, but we don't have it.
Well, yeah, I agree with you that we only have like a limited options on the derivatives, right? So like the CBOE and CME have the Bitcoin futures, but like in terms of like the overall coin offerings, like we still don't see a large number of derivatives. I think a lot of the problem is how to value those like the coins and how you can like, and then you need to calculate how to value the derivatives, and then because right now the market is still like speculators and like lots of them are speculators and they're like short-term investors. But with more and more like quant traders or the institutional investors come to play, and it's like a chicken egg. For those big players to come, you need like infrastructure, regulation, and also like the instruments that those players need. At the same time, I think the industry needs to because like original all those like inventors of Bitcoins, they're geeks, they're all from the technology side. And with more and more people from a traditional financial background, and then they can come up with some like derivative markets for all those coins. I think we're seeing that maybe within a year or so, like we'll see a large need for the derivatives market.
It's interesting, but as an investor, we use products that are highly leveraged, like options and futures, and even stocks intraday are leveraged, depending on your type of account. You have either a 4-to-1, 2-to-1, or maybe a 6 or 16-to-1. But in the world of digital currencies, it's very hard to get leveraged. So Yuri, here's the deal. Where's something to be strategic that these not really good, but also be leveraged. You have to be able to leverage. And one of the reasons there's been a successful marketplace for different futures, different commodities, and even different currencies, things like that, is the leverage in currencies could be in the spot market 50-to-1 and in the listed marketplace 16-to-1. But in Bitcoin or in any digital currency, it's basically zero whenever you negotiate. Even at our firm, we're holding 80%. So it's very difficult. It's expensive to trade. That's all. And sometimes people realize how's that going to change?
Well, I think it has to be greater adoption. It has to be more stability. The regulatory environment, to Ross's point, has to come into play. Scott mentioned something earlier with respect to kind of how the industry is going to shape up. And so one of the key challenges from my perspective is that for all of this to change, you have to have Main Street come in, but you also have to have the trading firms and the enterprise to actually support the challenges, right? And so until they do so, it's going to be the chicken and the egg, who's going to come first, because the trading firms that we're talking to, everybody's sitting on the sidelines and essentially saying, we're not going to kind of take a leap of faith until we know that this is consistent, this is stable, and there's liquidity, because you also look at some of the other coins, you look at, everybody talks about the top 10 coins, Ripple, Ethereum, Litecoin, what have you. You look at number 1600, 1599 on the list, you can barely find a place to trade those, and if you do find a place to trade those, it's 10, 20x, and so that's always the challenge of what's going to survive, what's going to be the adopted standard, what's the underlying technology behind it, and from your perspective, Tom, as you said, how do you look at that from a longer-term kind of investment perspective?
It's good. Steve, I'm going to throw a question at you, a big picture question. I've got a big story here. It's on the reality of the adoption of technology. And we put together this question, so I'm just going to read it off. Things like cell phones, PCs, and tablets are adopted faster than new technology in finance for obvious reasons. An example would be the first ATM was deployed in 1968, and it took 20 years to So what do you do with the patent in this case? The mass adoption of blockchain, what year? Mass adoption.
This is committal, isn't it?
There's no context. It drives me crazy sometimes. There's no context. I want somebody to kind of stick their neck out and throw a little context around it.
3 years and 2 days.
Okay, beautiful.
Now, I think we're in a very regulated market. We have SEC guys and FINRA guys every week. They put at least 2 guys in our office to learn about what the blockchain is. I think they're learning. I don't think they're getting as scared of it as they were. I will tell you that they forced us into a domestication of data stream versus blockchain and ubiquity. So I think they're getting more comfortable, but I do believe it's 3 years away.
3 years away. What do you think, Alex? Same kind of question.
Yeah, I mean, I think further. I'm more like 10 years till things really become mainstream for user-facing decentralized applications. There's, a laundry list of issues with Ethereum and a lot of the smart contract-enabled blockchains that are currently showing promise. There's a lot of experiment right now at the consensus layer with a lot of these protocols. So over the next 12 to 16 months, I think you're going to see ecosystems like EOS and a lot of these delegated proof of stake consensus mechanisms come to fruition in some regard. There's obviously the trade-off is decentralization to scalability, right? It's sort of a major trade-off in terms of getting decentralized applications to a point where people can actually use them. I think we're more like 10 years off.
Scott, I'll throw this one at you. Like, cryptocurrencies are not by nature transactional. No one's using them to pay for iPhones, to buy tickets, or movies, whatever. I saw a hot dog vendor in New York accepting other than that. It's limited. Does crypto need to be transactional in order to survive? And how are the transaction fees hurting small crypto dollar transactions?
Well, this is a great question. What's going to happen in this space is that people are going to have to start building services, basically like second layer services, where somebody like your grandmother can use Bitcoin without knowing she's using it. Right. And that's really what it is. It's, how complicated was it to send an email in 1988 versus 2018? And that was a 30-year, kind of a 30, 40-year transition there. So, so that will start happening. I mean, I am using Bitcoin. I'm actually buying some Pearl Jam tickets for Monday night using Bitcoin because the person I buy them from prefers to have Bitcoin and not US dollars. So those types of things will continue happening, but I think what's going to happen is you're going to see the transactional nature of, say, for example, Bitcoin become much more accepted and used in economies that aren't necessarily as developed as our first world economy is here. There's probably about 15 different ways people can pay for things out of their pocket, and they can make choices on what they're using based on interest rates on cards, or if they want to pay with debit, or even still writing a check. I'm sad to say I actually saw that this week. But yeah, so I mean that's where it's going to happen. I think you're going to see the merchant adoption happen outside of first world economies, and then those solutions are going to cascade much more quickly. And to the point, this industry is going to evolve faster than I think a lot of people imagine, because when there are going to be successful implementations, because everything is open source, you don't have to sit there, go out, buy a wireless, brick phone and reverse engineer it to try to figure out how to build your own stuff. So I think that's going to cascade and really roll pretty quickly.
It's funny, the speed of disruption and the speed of adoption has changed exponentially over the last decade or 2 decades. We used to disrupt on like a 15-year cycle, and before that it was a 30-year cycle, and now it seems it's like a 6 or 7-year cycle. So Yuri, I'll throw this over to you. Next question.
So I just want to echo back on Scott and Alex's point on the mass adoption and also the payment. Actually there was a conference yesterday, it's called Blockchain Futures in Toronto, and they're accepting the Bitcoin and Ethereum payments, and then we're seeing more merchants who accept the digital currencies. And also, we see some companies are doing, their payment, they use the MasterCard network, but the underlying settlement they're done through the blockchain network. And we will see a lot of companies are doing that. And also, as mentioned, the EOS transaction speed. I think with the improvement with the transaction speed, we will see more application scenarios.
Yeah, actually, and to follow up on your answer, one of the things that we're seeing on the retail side, I fully expect my brokerage account within actually a year to list currencies, digital currencies under stocks, your positions of stocks, options, and whatever else you have on futures, to have a notional amount for digital currencies. But right now the limitation is, as you know, it's all regulatory. We just can't get to certain places and we run the risk of alienating customers.
So I think just really quick, if we can add two things to that. So from an adoption perspective, I think it's going to be, within the 3 to 5 year time frame. So I agree with the previous comment, but I think one of the catalysts or one of the challenges around this is going to be, for your grandmother, for your grandfather, kind of to use it, to the point that was made earlier. It's got to be simple, but ultimately it's got to be accepted in kind of the finance, retail, banking environment, because people don't want to know that they're using it; they just want to use it, and most importantly, they want to be able to marry it with their traditional accounts because that's how they're going to fund this initiative. So I think that's going to be the biggest catalyst when you can go and consume commodities or services as we do today with credit cards or mobile phones. That's, I think, when the adoption is going to kick in and become critical mass.
That will definitely help. So I'm going to follow up with you. Same different question though. So there are a few companies that have tried to maybe stabilize Bitcoin addition, for instance, by tying it to, for example, to the dollar. Does crypto need to be more stable in general? Like, does something with 100% volatility, 100% volatility again means that the expected, if it's $100, it means the expected move is $100 higher or lower over the course of next year, which is great for investors because you want to risk a little to potentially make a lot if you like it. But the question is, if you're using it transactionally, and does it need to be tied to the dollar, or is volatility, does it need to be stable, or is volatility good? In the sense, in the transaction sense.
So I think it's a little bit of both. I think volatility is a good thing, especially in the early days, to kind of weed out everything that's going on and establish some standards. But at the same time, I think stability in the marketplace will really be beneficial. I don't necessarily know if it needs to be tied to a dollar or to the euro or to the Japanese yen or what have you, any specific fiat currency. I think it's really more about the stabilization and the underlying foundation of that particular currency. So if you think about Bitcoin, Ripple, what have you, what's behind it? What's, who's managing it? What's the team? What's the market penetration? All those different things, I think, are going to stabilize it itself.
Steve, let's talk a little bit about, just to throw it in there about ICOs, because I know I'm fascinated by the space. I haven't really participated in too much myself, but it seems promising in the sense of, venture capital and everything else, but does it have a strong enough, so you need to have some faith, you need to have some trust. Does it have a strong enough history so far to survive, or is it on life support?
I think life support's a good way to look at it from a regulated basis. I think when you look at the multitude of companies that need to raise capital, I think the ICO, whether it's an ICO or a token, ends up being a security, ends up being something that goes to market, whether you're at the VC level or the PE level, the private equity level. I think our focus is to stabilize the investments in the early stage companies, meaning again $5 to $250 million revenue companies. So much more boring than kind of the volatility you guys had. And last year, on an aggregate basis, we were at 12.19% interest, which is very boring from a trading standpoint. But from a yield standpoint, it's quite aggressive. I think that's where we see a lot of the companies alleviating the ICO, alleviating the valuation risk, and stabilizing into a more yield-oriented product.
I'll throw this one over to Alex. Let's talk privacy for a second. It's a very hot topic all over, and many companies, especially in the financial service space, after we've seen what's happened, whatever, not to bring up Wells Fargo or anybody else like that, but when we talk about privacy, maybe it's Facebook who knows. How do you maintain privacy, on the blockchain? Can you? I mean, is it a safer environment?
Yeah, so privacy, there's a couple privacy points, right? There's Zcash, Monero, Decred will soon be implementing a privacy feature. Privacy is something that I think is an impediment to adoption. These privacy points aren't as adopted as, say Bitcoin, just because they're used for a lot of underground activity, a lot of sketchy activity. But I mean, from the OTC trading standpoint, like we don't trade privacy coins just because we need to send trade confirmations to counterparties with links that are, links to transactions on Etherscan or BlockCypher. And we need that transparency right now in order to facilitate, institutional side activity. So I think that a lot of the privacy coins right now if the privacy feature isn't that meaningful right now, because there's such a lack of regulatory and there's such a lack of just transparency with how all this stuff is going to be governed. So I think Bitcoin, Ethereum, and transparency is really important to adoption in the short term. Right? Maybe in the longer term, there will be more of a need for privacy and transactions.
So, quick story. One morning, setting up a show. Producer says they got this 17-year-old kid from Canada. He's launching a coin, and he wants to come on the network and talk about it. So I'm like, well, we don't usually do things, but this may be interesting. So, and a few times we did a calling, and this kid from the college computer who did great theory. And when he's on the show, I turned to the co-host Tony and said, nobody's ever going to buy this. I want to say it could have been 3 cents at the time, but it may be 30 cents, and we just kind of laughed it off like that was one of the dumbest investments we ever made. And it was the dumbest investment we never made. But, and it turns out, he was in his mom's basement and not kidding. He was in his mom's basement when I saw headphones for the interview. It was the first interview we ever did. But obviously he's done some pretty spectacular stuff. So he recently said that too much focus is given right now, Scott, to the price of crypto and not on the execution of the projects. Is he right?
100%, and that's why I mentioned before that price is number 9 on my list of sensitive when it comes to this industry. It's certainly, the first thing that everybody wants to talk about, and panels like these draw the biggest crowds, and I get that, I understand that, but until you start separating your first world brain that is addicted to the US dollar as being the peg of value, you're not able to then release yourself into what I call your second world financial brain, where you start thinking more in terms of that future value proposition that's out there, and that's going to be the protocol layers like Ethereum and Bitcoin and the rest of them are all going to benefit from people building application layers on top of it. So that's why I kind of stayed away from ICOs for the last 2.5 years, just because I would rather see somebody be successful and build something and then take a look at it, as opposed to just taking a look at a website, a white paper, and start sending over a protocol code.
So Ross, I'll throw this over to you then, along the same lines. Does large tech companies, Google and Facebook, and they're working on lots of different shadow-based crypto projects, things like that. Does they involve large corporate players process, the commercial process?
Yeah, I think it depends. I think overall will help with mass adoption, right? Because they already have millions of users on their platform. So as far as I know, they focus on underlying technologies, right? So they focus on moving their infrastructure or moving their applications to use the blockchain technologies because they see this decentralized and they cannot change the records. So all the features from the blockchain, so they see the real usage to improve their infrastructure and applications. But from another economic perspective, I don't think they're actively working on that, and that actually leaves a room for entrepreneurs to make the innovations.
I'm going to change gears just a bit. Yuri, I have a question for you about potential Congress or some kind of legislation talking about who can use blockchain and how. So there's a lot of discussion about artificial intelligence and AI having blockchain accounts, and then kind of the legal legitimacy of that. Can you comment on that? Because you've heard a lot of people from Elon Musk down to lots of others talking about how kind of one of the greatest risks out there potentially is different AI accounts, and especially sitting on blockchain where where things might be anonymous. Are you worried about Congress getting involved or any kind of governmental regulations?
Yeah, I think they already are. So, from a company perspective, we're directly engaged with the SEC around a couple of things that we're trying to do. And so from that perspective, what we're hearing at a very high level, and I'll answer your question more directly in a second, but essentially is that they want to see everything. They want companies to approach them. They want companies to talk to them. That being said, there is a lot of skepticism from their perspective to say, look, we don't know what's going to happen. We're split down the middle internally to say that we like some things, we don't like others, we like AI, we don't like ICOs, and so on and so forth. And so it's kind of a mixed bag right now where you have a tug of war going on internally. And so I think somebody at the highest level, whether it's Congress or, there's a number of these legislative consortiums and whatnot that actually put together different types of advocacy groups, and something's got to change. So I think you will have that involvement at some point where somebody's going to step in and say, look, we just got to issue regulations, and it's got to become more black and white, because right now it's very gray.
Yeah, that's great. I'll throw this one over to Steve. A little heavier. Let's talk about the disappearance of risk as a topic. So how about the loss of counterparty risk as the blockchain itself is a counterparty? And the math says you can't play it kind of roads. So in other words, it's kind of a discussion on, say the world runs on grid contracts. But what happens if it's blockchain and slot? What about this kind of a transition?
Yeah, I think we've got to look at it. We've taken a very conservative approach to the tradability of the underlying private companies, eliminating because from a regulatory standpoint, we have to provide both sides of the equation through the broker-dealer community. So we have enormous transparency, avoiding any and all anonymous trades. So ours are, regulators know everybody involved in every trade. And I don't think that'll change in the short term from our side.
Okay, Alex, everyone talks about blockchain. It's even the name of the conference. But it's hard for just the average person to point to examples of how blockchain works for them. It's just a tough thing for people. And I like when, I think in order for something to be, in order for a product to be successful, the average person has to be able to articulate what it is. Without articulation, there's almost no sustainability. So what's the best example you can think of how blockchain is being used in kind of modern?
Yeah, money is still the best use case, right? So Bitcoin is the original blockchain, and will always be, in my opinion. I think all this experimentation at the complex layer is kind of rubbish, and you still use proof of work. Cryptocurrencies are still sort of the mainstream, most adopted cryptocurrencies. So I think as a transfer of, for the first time, assets can be transferred digitally over the internet, right, peer to peer. And I think that's our primary use case, and will be for the foreseeable future.
We had a short time slot of 45 minutes, but we have reduced it. I wanted to leave 1 or 2 minutes open for any questions for these 5 experts.